Howdy friends, thanks for joining us for this month's update on our livestock markets. I'm Colter Brown from the Northern Ag Network. Well, it was nice to drive around the country and still see a tinge of green at the end of June, but it looks like drought conditions are starting to creep back in. The big question though I got from producers over the last month is how long are these high prices going to last? There are definitely a lot of factors that could affect how long we see these elevated prices, but right now the indications are telling us that we could have another year of strong prices in front of us. Today we're going to talk about where the cattle futures and cash markets sit here at the midway point of the year. We'll talk about the USDA cattle on feed and recent acreage report, look at the first summer video sale of the season, examine the corn market, talk about these cow prices, and wrap up with where we're at in the cattle cycle. First, though, I want to thank this month's sponsor of the report, the Wyoming Beef Council. We got to catch up with several members of the Beef Council at the Wyoming Stock Growers meeting in Douglas. Now let's go to the Beef Council for a quick message.
Together, we bring more. Beef. It's what's for dinner.
Well, a month ago when we spoke, it looked like cattle futures may have set their highs, but June turned out to be a positive month. It wasn't without its volatility. We saw prices bounce around quite a bit, but unseasonably strong demand, a surging cash market, cheaper corn, and still tight supplies all contributing to higher prices. For the month, feeder cattle were steady to $1 higher, unable to ever really get above that $2.62 mark on the nearby contract. That's kind of where our resistance level is. Live cattle, though, doing better, actually adding $1 to $5 since the start of the month. Got to give a lot of credit to how strong these wholesale beef prices have been. Typically, post-Memorial Day is when we start to see beef prices come down, but really through June, they just continue to churn higher. The choice cutout seeing some strong performance, but the jury's still out on how we'll perform past the 4th of July and into the dog days of summer. That is when we see prices move lower historically. If consumers will continue to select beef given these high prices and inflationary pressures are definitely the question, especially with plentiful supplies of cheaper competing proteins. But thus far, beef demand has been outstanding, but inflation and recession concerns are probably the biggest headwind to this market. Well, cash-fed cattle prices are at record highs. That's pretty nice to say. But again, the question is how long will it last? As we look at how the prices have performed this spring, leverage is in the cattle feeders' favor, and I wouldn't be surprised if a month from now we're talking about a little bit lower price. That would just be a return to typical seasonal trends that we see, but year-over-year declines in cattle production should be supportive to cash prices. We are seeing heavier carcass weight, so that is somewhat absorbing the tighter supplies of cattle that we're seeing, but overall we should see a well-supported cash market. We finished the month of June with live sales $4 to $5 higher, averaging $1.96, and the dress trade $9 to $10 better, with an average way up at $3.13. That strong cash-fed cattle market overshadowed a bearish cattle on feed report in June. That report was expected to be a very quiet one, but came in with placements 4% above year-ago levels. They were expected to be not much more than steady, so that really surprised the market. Total inventory was just narrowly above year-ago levels, but again, traders rather focused on the bullish aspects of this stronger cash market and, of course, boxed beef prices that continue to perform very well. Of course, June is a very busy time for acreage reports from the USDA. We always get that report there at the end of the month, and USDA really surprised everyone with a higher than expected corn acre. 91.5 million acres of corn they're saying in 2024. That is 3 million less than last year, but more than anyone was expecting. So you combine that with corn stocks that are 22% above year-ago levels, and that caused the market to plummet to contract lows. And there's a lot of time between here and harvest, so things could change, but right now not seeing any indication that we should see a big or even moderate rally in corn prices. Now, those cheaper corn prices, don't kid yourself, they're definitely playing a big role in why cattle feeders are enjoying such large margins. They're approaching $500 a head. Now, of course, they're having to pay more to source feeder cattle, but those costs have gained substantially reduced from what we've seen the last couple of years, definitely helping cattle feeders right now. On that topic of feed costs, we want to talk about the hay market. That's seen some interesting movements over the last year. Of course, 2023, a very strong year for hay production. We had a relatively open winter that didn't require us to feed as much, so we came into 2024 with a lot of carryover stocks, record large hay supplies in Montana. So that definitely weighed on the price, and we've seen prices trend lower. Moving forward, we can probably expect to see some increase in hay prices. We're actually seeing a lot of old crop hay moving right now as ranchers take the opportunity to take advantage of lower prices and restock for winter. But probably we'll see hay prices increase just because we're not going to have as much production as we did a year ago. Now that brings us to the main event of this month's report, and that's the summer video sales. We saw the first two big sales of the summer with Superior Livestock's Corn Belt Classic and Northern Livestock Video's Early Summer Special. We knew prices would be above last year's levels. The question was by how much? Well, it turned out stronger than I expected, $25 to $35 a hundredweight higher on most of the calves. That's 8 to 13% better. Was really impressive on the heavier calves too, to see how strong that demand is. With these corn prices pulled back so much in the last couple of years, there's not as much incentive to purchase heavier calves, but the feed yards sure like those big 6-weight and 7-weight calves, and they didn't mind much on delivery dates either. As we look at some of the results from the video sale, we saw those light 5-weight steers, primarily 323 to 345, heavier 5-weights 309 to 331, your light 6-weight steers from 285 up to 313, bigger 6-weights 280 to 308, and your 7-weight steers very strong, 282 up to $3. Of course, July is going to have a bunch of video sales to talk about. We'll really test that yearling market and quite a few calves to sell as well. As we look at our local auction markets, we have entered the slower marketing time frame. We've still seen a few cow-calf pairs selling, meeting pretty good demand, although prices have slid back as you'd expect from what we saw in May. But the real story is this way-up cow and bull market. Prices seem to continue to push higher, and looks like just the bigger the better. We're seeing some of these big fleshy cows fetching north of $2,500 a head, and some of the bigger bulls upwards of $4,000. What's driving those prices higher? Well, it's the same story we've been talking about all year, the strong lean 90s trim market at record high levels. That's really encouraging packer buyers to buy up as many cows as they can. Now, these cow packers are struggling to make money despite the record high prices, just with how much these cows cost, and there's not as many of them to buy. We've culled so hard the last few years that not as many cows selling. It is putting the squeeze on cow packers. Now, as we move in to talk about the sheep market, that's seen quite a bit of improvement from last year. As we look at some of the recent sales, 60 and 70 pound lambs at the public auction yards in Billings from $255 to $270. The 80 and 90 pounders at Newell from $228 to $247. Kind of a wide range on the used, just seems to depend on the sale and how many are in the offering. And as we wrap up the report here, I want to talk a little bit about where we're at in the cattle cycle. Since 2019, 3.5 million head of beef cows have been culled out of this herd, down to its smallest level since 1961. Now, the liquidation in the herd primarily driven by drought, but also reduced profitability. CattleFax is saying that they're seeing indications that the beef cow herd has stabilized. Stabilized, not expanding. That's because there's a lot of headwinds facing producers right now. We look at some of those factors like just the average age of producer. Many older producers may take this high market opportunity as a chance to retire and not buy back in. Of course, we're battling the highest interest rates in at least a generation, increased input costs across the board, labor availability a big issue, and drought concerns still very present as well. All of that combining to maybe reduce appetites to expand as quickly as what we saw in the last cycle. Of course, the cost to replace cows could be a factor as well. Replacement heifer prices are going to be increasing. CattleFax is saying those bred heifers and young bred cows in the fall and winter probably going to range in the high $2,000 to low $3,000 range. So that could be a limiting factor as well. Lastly, I want to touch briefly on the leverage in the industry. Of course, right now, cattle feeders holding a lot of the leverage with margins of $400 to $500 per head. They're putting the squeeze on the packers, who are also feeling it from the retail level. Retailers have a lot of leverage as food service demand has pulled back, beef exports not as prevalent as they were in years past, and just larger supplies of cheaper competing proteins. Moving forward, I'd look for the packer to take some of that leverage away from the retailer as beef supplies start to tighten. Cattle feeder margins looking good. They're not going to stay that level forever, especially as supplies tighten further. We're not yet seeing these signs of an increased heifer retention. It will come eventually, but right now it's looking pretty good for ranchers. Like they've got at least a year of these high prices. Once we start to retain those heifers aggressively, then the die is cast. We'll decrease this herd size a little further, really put the squeeze on feed yards as they have to scramble to get the supplies they need. And then the question is, how fast do we grow this herd? Is it going to be like 2015 and 16 when we saw a rapid expansion and a big fall off in prices, or a more moderate expansion and moderate drop in prices? We'll have to wait and see, but for now it looks like some pretty good times are ahead for the cow-calf producer. Well, thanks so much for joining us for this month's report. From all of us here at the Northern Ag Network, hope you have a great 4th of July and cut some big hay crops. Take care.